Alright, what is up, guys? We're going to go over CVD divergences. CVD is cumulative volume delta, and we are going to go over it on deep charts. So you can go over it on whatever order flow platform you want. You can also use it on TradingView, but you do have to understand that the data is going to be different than if you're using a depth of market sort of data, right? If you're using tick data, it's going to be different. So that's pretty much it. And, no bullshit, let's get straight into it. So, what is CVD and how do I use it? CVD is something that's going to allow you to get very precise entries. A lot of you guys I know come from kind of an ICT background. ICT has something similar in the sense of a divergence. So that is a SMT divergence. A lot of you guys, I'm sure, are familiar with a SMT divergence. You can see, or you can think of it as the same thing. So imagine that this chart down here is the ES chart, right? And the way that we're going to really use this is going to be on the lower time frame. We're going to be using this CVD chart. And real quick, I do want to give a kind of just base explanation on what CVD is. So we're going to go ahead and give you guys an example. So let me go ahead and draw it out. Pretty much when we start out right here, we see that we're at 2,000 orders, 2,000 orders in volume, and 4,000 up here. So pretty much what is delta? Delta is really important to understand. Delta is buyers minus sellers. So when we give this gives us delta. So buyers minus sellers gives us delta, and then that's pretty much what we see here. We're seeing a cumulative graph of the buyers minus the sellers. So when we go ahead and look at this graph, it's not a price chart. This is different. It is not price, this is volume. We're looking at a volume chart. So we're looking at the delta. When we see that we have a delta flip, a delta divergence, whatever, this is going to be that. But before we get into it, I really do want to emphasize the importance of this not being ES. This is different. This is volume. You're looking at NQ. This is the same idea. So pretty much what we're looking at is just what is the underlying, factor in this? Like, what is really aggressive here, and are we gonna see acceptance through it? Are we gonna if we have very heavy sellers, or if we have very heavy buyers, are we gonna see acceptance? And that's what we can see through here. We can see the volume on the smaller time frame, and then we can see if we're actually getting absorbed. And if we see absorption, then obviously that's a great entry trigger. So more than anything, this is a tool to enter at absorption levels, right? So you get your area where, let's say you want to take a short around here for whatever reason. You see, okay, we have a divergence here. So that's how you use it. It's just a divergence, right? And at least that's how I use it. People can use it differently. You can get it for different data, but I like to use it for the divergence aspect of it. When we're actually going into a trade and how we can use it practically is like, let's say that we have a low volume node, which we do. We have a low volume node here. Now, let's say we want to verify or whatever. You have your entry where you want to enter for whatever reason. Even if it's an ICT entry, this can help you even if you're on TradingView. And you're like, okay, there's no SMT, or maybe you're not checking for SMT. You might be like, okay, Lander, you're telling us that we need to look for absorption. How do we look for that? And in a way that you can look for it, that's very easy, and it's very beginner friendly, but it's still a very powerful tool. Is going to be this. So you look for a divergence. As you can see, here we have a higher high up here, and we have a lower high here. And this is something that we're going to use on the smaller time frame. So this is not something that you want to go ahead and look. Oh, let's zoom all the way back and see how we are at these huge lows down here. No, it's gonna lose its importance. But like off rip, I can show you guys two different entries, and we're gonna go over them right now. But just another example real quick of how you can spot a divergence is this is one low up there. So lower low, higher low. This is a low, and then a lower low. So that's another divergence, and you would look to enter at that absorption point, both at the low and or at the high. This is a tool that you're adding in context. So this works with context, this absorption. Okay, so getting into this for this long, why would you care to look for a SMT or a CVD divergence here? Because we're already showing all of the traits that we want to get in to a buy. Not only that, we're here, we're obviously showing bullish volume, right? So using context is going to be the most important thing that you can use with this tool. Like I said, it's a tool. You're using it to pair it with something. So with context, we're having very bullish delta, right? So at this point, you're telling yourself, okay, I want to take an entry, and for some reason we're going lower. Let's see what we do from the volume to the delta. You see, we are very bullish on the volume here, and this tells me that I am seeing some absorption here because the sellers are wanting to take over, but they're not being accepted through, and there's that divergence being made. So here, this is a great symbol of absorption, because if there is a lot of volume that's bullish, but the actual price chart is moving more bearish, then that means that there are passive buyers, or in this case, passive sellers still around here, which can tell you that we're going to want to move it down. And we can actually go ahead and see here we have these aggressive sellers, right? And with all that in mind, we're going to have aggressive sellers. With that in mind, we're going to have passive buyers, sorry. So we can see that there's passive buyers. There's still, all of these sellers are in the picture, yeah, but they're getting bought up. They're getting bought up by by buyers. You know, they're passive buyers. Maybe not bigger traders, but they're there. They're definitely prevalent in the market. And this is where you kind of start to see, okay, let me see a divergence so that I can enter. So let's say that you see a divergence here. We cross this low. I like to use prevalent lows and prevalent highs on the lower time frame to kind of look for an entry. But let's say that we cross this low, and then we see that divergence. You can get your entry from this divergence, because that tells you that, okay, we're finally seeing acceptance. We're still continuing higher. We have a divergence. You can give it a shot. Typically what I do is I will enter this, maybe a 20-point stop or a 10-point stop, and then I enter. You can enter higher, you can enter lower. It's really up to you. But once you see that divergence, then you can enter to another extremity point or whatever. Take it to the high, easy 5R right there. And then for this other example, we see, okay, from here, let's say we have another level. We want to see lower prices. Okay, because we're seeing that these buyers are getting absorbed. We can actually pretty clearly see that. We have a lot of buyers here, but we're not moving that crazy on the volume chart. We're actually starting to move lower in price. This is absorption that we're clearly seeing. And you can wait and you can see, okay, let me see a divergence, right? Let me wait for a divergence. That would be here. This is a very aggressive wick, so it tells you, since it's not a body, it's a wick, that still tells you a lot of data. This is telling you the damage, is showing you a lot of different things here, where you get that entry up here because of that divergence. You see that we don't want to continue. We don't want to continue higher. The sellers are in control at this point, and you can see that following through with this. Yeah, maybe we take out this high, and that's a divergence. But it's a tool that's used in context. You're not going to just enter blindly off of CVD divergence. Even though you could, I really don't recommend it. This is something that you pair and use as an entry trigger. So once you're already looking for an entry, you're gonna go ahead and pair it up with your CVD divergence, and yeah, that's how you can take these trades. Maybe it's just a way that you're like, okay, cool, I see the CVD, now I want to go ahead and look for a short a little bit lower. Now keep in mind, this is almost New York. This is almost, we're about to close. We're about to close in about 30 minutes, so obviously the volume's died down here. But even here, we see we see another divergence. This is telling us that we're probably going to want to move higher. Right here, because we have a divergence. Around here, technically it's not a low, but it's the same thing because that low is higher. So I mean, if you see this, cool, you can get a quick little scalp like this to the highs. That's the idea, right? Then if we continue lower, another way that you can see it and use it is just kind of like, what are we trending towards? Like, why are we going lower? Why are we going higher? Whatever. Use it in correlation with your analysis. Let's take this for instance. What did we do at market open? This was at around 10. 10 a.m. reversal is a pretty good area to get an entry. Okay, we see a divergence here. You bottom ticked it. So, I mean, but that's in correlation with, okay, we've already gone really low. It makes sense to get an entry around here because this is the valley area low. It makes sense to get an entry here. So you see that divergence. You see the sellers that are not in control. You see that these sellers here got completely disregarded. So that's a level that you can see, expect to hold. Get your entry around there. Not only that, on the delta we have strong sellers that just aren't getting respected. So with that, you wait and you're like, okay, I want to see that confirmation. You get your CVD and bang, a 13R. Maybe you want this to be a little bit lower. You can get you want to give it a little bit more wiggle room. Okay, 7R. And that is a very conservative play. I would typically hold it a little bit higher, at least to the point of control. So I mean, you're getting very, very precise entries and it's very consistent. I would use whatever tool that you guys like to use for order flow, whether it is, quant towers or deep charts or motive wave or Sierra charts. You could use that. But if push comes to shove, yeah, you can use trading view. And I know that a lot of you guys are, saying, okay, how can I start implementing some order flow aspects into my trading? And that's gonna be a really easy way to kind of implement that. Now, what I'm going to do here for you guys is, so what you're going to want to do here is just go to the indicators tab, search up CVD, cumulative volume delta, and then you're going to get your CVD chart down here. Again, these longs were pretty clear with everything that I've talked about on my YouTube. You can already see what long I'm talking about. So here we're at the high volatility 0 DTE, and from there we're at an extremity point where we're going to want to see an entry. We've pushed down enough. There's a lot more stuff that I'm not going to get into right now because this is not what the video is about. But if we look at the CVD, let me move it around for a sec. Let's see. Do we get that? Yeah, we get a very clear CVD divergence. Not only that, we get it down here. So this lowest low is the CVD divergence. From here, we're still forming lower lows, and we start to see buyers take control. Around here, it would make sense to take a long. You could take a long here. You could wait for a retrace, do a little bit of something like this. Then, you go ahead and wait. You see your CVD divergence. Bang, CVD divergence. And then you take your long from here. Some of my students did take this. You could hold it to VWAP, super easy target, or the target that I was talking about, which was putting control. It was actually just about here. So that's how you use it. That's how I use it. And if you're on TradingView, that doesn't mean that you're forever ineligible. That just means that you got to use what you have right now. You can use quant towers, which is free, but for now, if you want to keep it simple, if you want to start integrating these stuff, use it on TradingView, and yeah, it's going to give you a very clear direction too, because if we're trending obviously higher on the volume, then we're most likely going to be bullish at this point. And then off open, obviously the CVD's bearish, and then you're not going to look for longs until we see a divergence. Up until here, this is when the buyers started to take control. Just around here. This is when we just started to take control. So we see that on the CVD, it gives us a very clear indication. And yeah, and something that you guys might be confused about is like when we open, it's gonna start at 0. That's because again, it's cumulative volume delta. This is the cumulative volume when we start. It's obviously 0, and then it just starts adding up all the orders as we go, adding, subtracting, doing its thing, and boom. That's pretty much it. Yeah, it's a tool that I look at every single day when I'm looking at my deep charts. I am always looking at this, and this trade that I showed you guys real time would have hit super easy. I think you see that the buyers are taking control here. See the divergence. Use it with context. It's an amazing entry trigger. More than anything, I want you guys to understand it's an entry trigger, not a whole like frame. Don't frame everything around it. So yeah, it's a tool to use. Add to your arsenal. It's gonna make everything that you take a lot more precise. And yeah, I hope that you guys enjoyed it. This one's a little bit longer because got some feedback on my previous videos that you guys wanted me to sort of have some longer videos, go a little bit more in depth, show more examples, and that's exactly what I did. So today, this was a very clear play. There's a lot of plays everywhere, and if you got like the way that I trail, I'm trailing myself very aggressively, so either would have gotten stopped around here or up here, realistically up here, because this is where we actually started chopping. So yeah, that's pretty much the idea. Um, if you guys want to watch me trade live, join my Discord. I trade Asia every single day for free, and I got that link in the bio. Obviously, use my code for Tradeify, Lucid, Tenacity, Alpha Futures. I don't know. I think that's about it. And yeah, guys, stay safe. Let me know what you guys want me to make a video on next, because I'll make it. I do read the comments, so be more active. And yeah, join up that community, show some love. And I'm gonna keep these pumping out for you guys. I'm gonna keep them coming. But yeah, much love.